Hello, and I want to go through something that I discussed with someone earlier today, actually, and it's understanding market structure and understanding the basis of how OBs actually work, right? And to be honest, this is probably the best way to see it, and it's not far from the previous video that I sent out on this, but what he found confusing was understanding the weekly highs and weekly lows and understanding why that is important, regardless, even though we're sometimes entering trades just based on the 4 hour. And the thing is, you can enter on any time frame that you like, but obviously you still need to understand the higher time frame, right? Say for example, um, say for example, this is the weekly time frame, right? Now, obviously, say we've got an OB here and there's an OB here, right? So we've got entry points here and here. Now, if this is the weekly, right, this move to make this retracement and this move, for example, it's probably taking weeks or it's probably taking weeks or days to get there. And you have to bear in mind is what's happening is if I just change the color, what's happening is when price is actually in here, we're creating this sort of formation, right? Now, if we look at what's happening here, okay, and what is that? That is our entry criteria, is it not? So this is our entry point 1, I believe, in the PDF. And this could be, for example, on the 4 hour or the daily or the hourly. It doesn't matter. But when I say price is fractal, this could be the 1 minute. I don't know why I did that. This could, well, you know what? Let me get rid of it completely. There you go. This could be the 1 minute, and that could be sitting at this point here. Because say, for example, if I do it in green, for example, inside here, we can have this. Exactly the same thing. But what happens is we have to understand that price is fractal, right? So say, for example, we're inside. Say, for example, we are now, I don't know why I did it. Okay, yeah, I'll do this. Say we're in our weekly OB, daily OB, or 4 hour OB. It doesn't matter. But if you're thinking about it from this point, say this is the 1 minute time frame. Okay, that's the 1 minute time frame. We've got an entry here. Okay, say this is the 5. I don't know how many colors I can use here, but let's see. And say this is the 5 minute time frame. Okay, entry here. Say the next time frame that we'll enter is going to be the 15-minute time frame. An entry there. Okay, say then we've got the hourly time frame, so it's going to be a bit different. I don't know why. Oh gosh, no. Okay, there we go. Say this is the hourly time frame. We've just broken structure, and we've got an entry here. Okay, and then we've got the 4 hour time frame. Exactly same principle, and the entry point is here. But if we look at the and let me just do the daily time frame, seeing as we're going through the different time frames. Let's do this color. And we've got an entry point here. Okay, so these are the different time frames, and this, for example, this up here, this is our weekly OB. Okay, so obviously we've got a huge swing. And the reason why and the reason how we can actually get to the point where we're getting really good entries, wick entries even, on the weekly time frame, on the daily time frame, whatever time frame you're using, is because you have to understand that price is fractal. Because as you realize is that was a 1 minute that has this structure shift, right? And remember, when we get that's a really bad example actually. that has this structure shift. So the price is now shifting to the downside from coming down from up here, right? But what happens on the lower time frame has to replicate on the higher time frame, which is why we try to enter on the lower time frame purely because of this reason, because it all replicates itself regardless of how. So say if we enter on the 1 minute here, right, and that could be inside a 4 hour or daily or weekly wick, right? So we've entered before like the retail traders have even thought about entering. Okay, that's the whole point. So when retail traders try to enter, we're probably already sitting about 10, 20, 50 R even on our trade, because we caught it perfectly at the reversal side. Okay, and that's exactly how this principle actually works. Okay, it's all based on structure. We don't, in terms of OB is just the entry, but we're really trading structure, and that's what I need you guys to understand, is structure and how important it is, because understanding structure is the most important thing that you'll need in order to succeed in this. Oh, I just rhymed. It's probably the most important thing that you need when you're trading this, right? Because in terms of structure, remember, all we need to look for is clear breaks to understand. Sorry, that was a very bad drawing. But all we need to understand is clear breaks of structure, right? To understand when market is shifting. Because, for example, we've got an uptrend, okay? For that to shift, we need the lows to be broken. Once one of these lows are broken, then we can consider market has started to shift, which has happened now. And that is our entry criteria 1. Okay, obviously sometimes you just get this, right? Is that the same thing? No, sometimes you get this, so you don't really get an LG, don't get a liquidity grab, but price just goes, which is fine, it still works, but it's just showing you that you need to understand when market is starting to shift, and that's when we're looking to enter, which is why we look to enter on the minute time frame, or even less even, if you got TradingView Premium, because we understand that the market is so fractal that, you know, it's all going to be replicated. Sorry, that was my chair squeaking if you heard that. You know, it's all going to be replicated on the higher time frames, regardless of what time frame that you enter. Now, why in the video did I cover weekly highs and lows? It's for you to understand your swing points, right? Because you need to understand. I don't know why I drew it like that, to be fair. Nah, tans. Okay, bear with me. Right, so why in the main video did I talk about weekly highs and lows? It's because we need to understand where the overall bias is, and this is how you catch your big swings. You can either use them monthly if you want to, but you need to understand that, say for example, although you're probably buying the 4 hour here and selling the 4 hour here, and then buying again and then selling again, it's all noise on the higher time frame, which is why I want you to focus on, which is why I mentioned about the weekly time frame, is so you can have swing entries and just hold, right? Because these are massive moves, and as you see from someone in the group, what you'll see is their swings is based on either weekly or monthly time frames, and they just held the trade, right? And that's why I've taught in the main strategy video why you need to incorporate the weekly, but it doesn't mean you need to enter off the weekly. So this is why all the content that's being sent out to you guys is there for you to use, because as you can see, I don't always go off the weekly because they take ages to get to. I don't always go off the daily because they take ages to get to. You know, 4 hour daily is probably my highest time frame, my higher time frame, or even the hourly, as mentioned in the PDF. So make sure you have read it. But you still need to understand the bigger picture of this. You can do whatever you want that's happening inside these pullbacks and corrections. Sorry, they're both the same thing. These pullbacks and impulses, right? But you still you can't ignore the overall picture of what's going on the higher time frame. And I hope this video actually helps, and hope that it clears it up, because I think understanding the fractal nature of the market, I know it definitely helped for me. So hopefully this sort of clears things up for you guys.